Hey traders, Day Trader Rockstar here with you, and this is going to be a very educational, inspirational, and hopefully other things come out of this video also. And it might not be all good, but we're going to of course talk about what we're all here for: making money in the markets, right? And and actually, let me clean up my screen here for a second. Before I even forget. The Bull Knox 90% coupon is good until I think tomorrow, the end of the month, and that is kind of end of the about 3 or 4 more days, I believe. That is a great coupon. It's a recurring lifetime coupon, meaning it's 90% off every month. DTR 90 is the thing, and again, just I want to take that down, so just remember that DTR 90, and then let's see, there we go. This is actually something I'm working on, but I want to actually show you the markets right now, but I'll show you about this in a second. The 2020 bull flag. Got a lot to talk about today, but mostly we're going to be talking about a big issue in trading, and how do we correct that? Even though each and every day we come in here and from day in and day out we have hundreds in the chat room and stuff, and I still see a lot of people struggling, and it's not that the market's not easy to trade, but what I do see is a lot of people are trading when they don't have to trade, and that's why I think they're struggling, because I think there's a lot of over trading going on in this environment. And when I say that is because what I teach is something that I built over years and years of being a trader, full-time trader, watching the market. You know how much I watch the markets. I watch the markets here. It's tonight. What is today? Today's Sunday. So today's Sunday night. I'm here waiting for futures to open up. Anyway, finally, the light bulb goes off, goes on, and you find out that there's no perfect answer to the markets. There's no perfect way of making money, but you can drastically make those odds in your favor. And I hate to put it in terms of odds and betting and stuff, but sometimes you got to look at the market that way as a business, because this doesn't have a set of rules that it has to abide by. It's mono versus mono. And each person is their own trader. In our case, we're going against algorithms and black boxes and news and information, and you're trying to make profit from the market here each day by most likely, trading, trends, patterns, breakouts, stuff like that. Everyone has their own little niche in the market. How they want to trade the markets. That's what trading's about. There's thousands of indicators out there. There's thousands of people out there to tell you how to trade different ways. It is what it is. And, if they work, they work. And you should know that they work. And that's what I kind of stress the fact that we have something that works so good. The hardest part is waiting for it to happen. And that is very hard to do. And it has to be, you have to really there's a balance in trading. Of not wanting something, not wanting to find it, but letting it show up. If you're chasing it, and it's going to run faster, and you're never going to catch it. But if you come back and let the market come to you and set things up, you'll see them. And when you see them, then you take them. But if we're rushing into things and not really gauging, or your minds could actually play tricks on you. But you really do want to have, pure good divergence set up, at least a lip divergence that's above that 20 line. A lot of people will say, well, let's go back here. Everyone's going to be trying to dig something out of this market, and there's going to be better setups than other setups. Here's like a little divergence right here, actually, at 230. And the market here kind of did break here. We had a little downward channel. When I always say we have a divergence, the channel that the divergence comes in will be broken. And that doesn't mean that we're going back up to the highs and stuff. It means that we're going to have a bigger than average move on this, because this was kind of tight. It was staying within here, except here we broke down, came back up, stayed tight, had a little divergence, popped out of it, and kind of drifted sideways. But the fact is, the divergence will always give you a pop in the direction. It might not be good enough for you to get a good entry, and stuff like that. And that comes to understanding market conditions, and also understanding that there's not going to be a perfect method, but we can identify the levels where the market's going to move more aggressively. And if you could develop the discipline and patience to wait for those levels and really define them on your own side, that you're able to like say, all right, this is my criteria. So I give you my criteria, bull flag, my criteria right here. Stock has to move up off the 20-period moving average at a steeper angle than the average. It has to make that space between the 50. Then it has to drift back, and as it drifts back, we want to have that 60-10 above 85. I've been moving my line up here. I prefer it to be at 90 because then it's a no brains. But 85, I would say, is a good level. So if this is above 85 and the price is coming down to the 20, you buy it if it touches the 20, or if the 9.3 touches the 20. That's why we call the 20-20 bull flag. But this, so the price has to be above the 20. This is the most important thing. If this higher the number on this, the better the trend and more chance that you're going to continue to move higher. So you're playing into the flag. You know which way the directional change is going to happen because of this. And these are just rules. If this is pointing higher, going up like this, you're most likely going to get pullbacks that should be bought. If it's going down, the 60-10 starts going down, most likely you want to be selling the pops, because that's a big difference. That's what happens with flags here. Once we're embedded up on it, and I have to find, like, here's the market here. It's like we're going down here, and we're down here pretty bad, and the market's just trending down. Very hard to see that until we had a divergence. This was actually divergence on Friday. It was a 44, and a member in the room shouted it out, 44 divergence. And I said, you know what? It is a 44 divergence. I said it is a very rare thing. But what's the thing we say? The 44 divergence is something you have to take. That is your money trade. So it was a good, and it actually popped here and then kind of chopped around. Eventually went a little bit higher. Eventually held off that low, that pivot, and went much higher. If you look back at this divergence low, you put your stop right here. It's right under that green line. You can see that green line was never really, this thing went up 90 points off of that divergence, which is great. Those are the things you have to be in front of. That's why you have to be in front of this market at the right time, at the right place. You cannot, and this is where I'm going to have to rip into, and I have to rip into everyone. You cannot lazily just decide to get into the market and try to, and get it. Maybe you are. Maybe you're an expert trader. Maybe, maybe you're no problems. You're calling direction. You have your own thing. But if you're having trouble, it's very easy to kind of have things set up for you, meaning watch our 9.3 stochastics, watch the 60-10, understand these set of rules. That's going to keep you out of trades. And when these set of rules line up, that's going to give you a higher probability chance that that's going to move. It really is. Other than, knowing, order size and order flow, we have other things that we measure and stuff. But, the divergence on the stochastics and the meaning behind that, we're very, very good on that. And it might not show up all the time. And that's the key to making money, is if it's not showing up all the time, don't force the trade. That's when people are saying, no, I want to take a shot here. Like here. All right. Yeah, I get it. The market just sold off hard and I'm going to go for a bounce and stuff. But if I said, here's the methodology. It's in a book. If you follow the steps, you're going to you're going to make money. If you add other stuff to it, you're going to degrade the original, and you're not going to have the percentages and the thing. So what happens is, you try to do one way of trading, the right way of trading, and then you start going off and doing a little what I call gambling, because a gamble is basically a trade that's not a setup that the three setups I'll give you, that divergence every single time. The 44 has still never been defeated in my eyes. The channel lines and stuff, being in front of the market at the right time at the right places is super important. Super important. I put out the alerts, as best I can. I think that's what the greatest service ever is, the Futures Trade Alert network, where I send out those on the cell phone. And if you're not a member of Day Trading Radio, and if you want to get involved, you want to get those, they're pretty valuable, and they're at patreon.com/Day Trading Radio, and they're $20 a month only. That's kind of I think it cuts off a few more people. I don't know if there's even any room left, because it was capped at 100, and I think that 100 passed. But let me know if you try to get on it and it gets rejected. Email me, ironaction@yahoo.com, and I'll set another one up. All right. Now I'm going to go over some rules that can make things very easy for you and maybe prevent you from overtrading. Overtrading, again, you're not going to be making too much money overtrading. Unless you're actually following the rules here. If you're actually following these rules, you're doing well. And there's a lot of people in the room that are qualifying every day on the prop accounts. So it's important that recognize the trend that we're in during the day. We could probably figure that out. I discuss it. First of all, we always want to look at where the price is relative to the 200 period moving average on the 1 minute time frame. That's a good judgment of the overall trend. The VWAP also, if it's above us, that's definitely a good good indication. The 20-50, well, as you can see, under the 50 or under the 20 at a decent pace, that's always good, and we always look for flags into that. So we're definitely, everything is pointed down. Everything's pointed down. The thing is, if it's pointed down or under 30, and chopping around there and not really moving up, but kind of hanging out down here in the low part, every rotation needs to be sold into. And we talk about rotation means any 9-3 rotation up to the 80 level should be sold into. And as you can see, each one of these, I always put these little squares on them. Just when it touches that, you should be selling into it. And that way, even if you're in, maybe you got for some reason you got in, maybe you're not, maybe you want to short it. This is where you want to short this. A little bounce, you want to short it. This is where you want to reshort it. This is all embedded here. Every time it gets up here, you probably want to short it. Plus now there's trend lines, all kinds of things lining up here. Get a quad rotation bounce. So these are just X's and squares are the only time you should really be involved. And you shouldn't even really be involved at all these times, because this is still, I break it down into one more setup. I break it down to a quad rotation divergence. That's the setups I take. And as you can see, some days we don't have many of them, and then you end up forcing yourself to trade. Here's a little divergence right here. And that's a nice one on the 14.3 too. It's nice and high. And you can see a little candle, but it's always about the closing prices. If everything lines up flat on that, and you can see that definite divergence between stochastics, that is a divergence, and that needs to be taken. And if it's in a sign of a pattern like this, very nice. And as you can see, now we're in a downwards, this is starting to turn back over, and now we're in a downward move, and each downward move now kind of goes sideways, that kind of moves up. This is staying down. It's pretty much a bear flag. It's just not getting there. Not getting, it's weaker than the average, bear flag. That's what it's telling you. This came, again, down, down. We don't even get a full rotation. We just drop off pretty hard. But you should see that. You shouldn't be going long here for no reason at all. I mean, you're getting these downward trends. If you are long for whatever reason on a quad rotation, you need to sell it. Sell it as it gets close to 80. It hits 80, and if it breaks down before that, you should be out of it. At least put a stop in at that low there, so it's not that bad. If you're buying like the lower trend line, that's what you would do. You'd actually, it would be okay. I'd understand people buying the lower trend line here. If they had 1, 2, 3 channel, 4, 5, 6. So it's a pretty good channel. So it's okay to buy into that. Just it didn't give you much. Well, I don't even want to talk about that, because this is, again, over trading. Again, trying to find every nook and cranny of this market. If you could just hold off for divergences. And a good divergence is a good angle on our divergence line here. I would love to be, 10 degrees higher, 7. I deal with 7 usually. I look at 7, anything 10, and that's from the low to the higher low. And I want to have that higher low above that 20 line. And it doesn't matter if it's a double bottom or a regular divergence or whatever, but I really want to have a big, I don't want to be digging and pulling out my protractor and seeing if there's even an angle there. Let's see what we have going on. And also remember, if we do get a divergence in something like this, it has to come off on the rotation, or you have to place your stop right underneath there. Now here's a quad rotation. This one actually did get up to an overbought level and then kind of drifted back down. This one got up to the overbought level here and came back down. This one didn't even get up there. It kind of sold off. And this, so here's another one. So anytime this is pointing down or down, every rotation most likely will give you results to the downside. And sometimes this is overnight too. Like futures are going to open up here tonight. But all right, so let's get back to it. So why are traders out there having a hard time? Well, you know what I'm saying? It's not being in front of the computer at the right time, not being in front of your trading screens at the right time when these setups are going on. You can't miss these things. If anything, have the future trade alerts on. Make sure you have that on and you check it, because I'm only trying to put out those quad rotation divergences, updating you on quad rotations, because those are the big reversal areas. And all we need is a good two good clean reversals a week. I mean, you could cash in on those. These will get the 44 today went up like 90 points on the S&P. That was incredible. Not that anybody got that, but these are the type of trades when you get a nice divergence. There's a little divergence right there in the middle of the night. I would if you happen to be in the middle of the night trading, I still would only trade the area. I would only trade the divergences. And if you were looking at maybe a quad rotation, you can see how choppy this is. It's like a quad here. Nothing really about. That's really choppy. So for me, it's all about the divergence here. It's all about this divergence right here. And even a lip divergence. I'm not calling this a lip divergence. You can't see it, but lip divergences are very good as long as the lip is above the 20 line, and that's important. And don't cheat yourself, and don't try to make things happen that aren't really there. Settle for the best, and you're going to do the best. And some days are not going to be any good setups, and that's going to be the toughest days for you, because that's when you're going to force yourself to trade, because you're going to be, well, I'm sitting here, all I'll have to do is push the button. I might have a 50-50 chance of winning or losing here. Yeah, but that's very bad habits to do. Very bad habits to do that. But I understand. I can't pull away from that monkey on my back sometimes. Very hard not to do that. Oh, you know what? 950 reversal, or no, the 350 murder algo. Let's take a shot. Very hard to do that. I understand that. What I'm telling you is, the method is drawn out for you. Most of us will have a hard time following that. It's up to you to get to that, conquer your demons and apply the method without applying anything else. Keep it pure. Don't overtrade. Overtrading will just, corrupt the method, and it'll lead to bad stuff. It'll lead to more overtrading. It'll lead to revenge trading. It'll lead to gambling and the frustration. And then you fall deeper in a hole, or at least get more frustrated, and it's just harder to get out of that. Start with proper rules. Prove it to yourself. It's great to do the prop accounts. Prop accounts are great. You shouldn't be trading your own money until you can make money on the prop accounts. If you're going to be a day trader, position trading, much different. It's not. I don't put too much into that, because we do position trading, but it's usually plenty of time to get in. Look for the same patterns, but on a daily time frame. And if they're not showing up, it takes days for it to show up. It's not like minutes. We're waiting just minutes for another setup. It could be days and weeks before we get a good setup. So that's why, you just have to wait for the swing trades to come along, because you want to apply the same rules. The rules apply on all time frames. So I'm looking at a couple. I was going to do another watch list video today for the members. the stock, so I'll do that next. But we're watching CMG. Let me get back here. All right, well, all this talk and everything and how scary it is to be a trader, a new trader. I hope everyone could gain something from this and understand the mental aspect of the game. And here I'm trying to help everyone. I don't want to discourage you, but you have to understand the reality of how hard this is. And that's the big thing. If you could understand that and, set that as your goal and your challenge, you accept that challenge, all is good then. You're going to do it. It's not that hard to do. It's hard to, stay on course. Once you start to stay on course, you will see the benefits of that, and it will become addicting to you. I always use analogies, or at least things that other people could relate to, and with trading, poker, gambling is such a good one to use because they have a lot of things in common, especially with money and stuff. And we always talk about the person who was a professional card counter. Could you just go into a casino and play? No, it's a gamble. It's a gamble. You go to the games that you want to play, most exciting, big payoffs, little high odds, low odds, even more close to even odds. But most likely the house is going to win. The more time you spend in their money, they're going to get the money. Except when people come in here and they say they want to even the playing field and enter the card counter, who waits and waits until everything is perfectly set up, and then he starts to bet. Because he's watched the cards, whatever he does, whatever the system they have, and they count it, and then basically can gauge how many face cards and know when they should start betting and stuff. Well, that's like what we do with a pattern. We're letting the market get us all its craziness out, and then all of a sudden it starts to come into a rhythm, and then we start to see something in a pattern, and that's when we strike, because the odds are in our favor. And we're not getting involved in the things that we don't know in the morning from 9:30, 9:45, unless there's like a true divergence or something. But we just don't want to just like, I'm guessing I'm going higher. I'm guessing I'm going lower. You could do that. That's, I'm not going to say you can't do that, but you're not going to be successful in the long run. And how serious are you to do this? So I've been working on, I've been working on these not little flashcards, just little I call them cheat sheets of the 3 setups I want you to get into. All right, and I'll give this to our members. It's easy. I mean, I'm just I like doing this stuff. I think it's good teaching tools, and I think it's very important to have this stuff kind of in a setup like this, so it's easier for some people to read. Maybe it reminds them of school and stuff, and they could just, their mind works a different way. I like this type of thing. My mind works this way. Like, give me a start button, make sure everything is lined up perfectly, and then take the shot. That's very easy for me to, understand. So I like that, and hopefully you like that too. This is basically a bull flag, and what we want to happen with a bull flag. And I try to give you even a little picture of it too. So the first thing here, the buy signal, enter stock when, the stock or futures. I should be futures. Found it my first error. Price have aggressively moved up off the 20-period EMA in a steeper than average move. So this is it. It's on the 20, and then it pulls away from the 20-period moving average up here. See the yellow line going there? The market is in an uptrend and trading above the 50 EMA, the 50 EMA. And the reason that is, we're looking at bull flags. We want to have an uptrend to be traded in the bull flags. We want to make sure we're above the 200, some other EMAs too, 50, 200. The 9-3 stochastics have dropped back down towards the 20 line. So here's the 9-3 stochastics, and it starts coming back down to 20 line. Now, it does not have to be at exactly 20, but we want to see the relationship between the pullback here and what the price is. If the price is holding on that 20 and we're down at 20, that 20 is an automatic buy. It's just something that just triggers. The 60-cent stochastic is above 85, preferably 90. So if all that lines up, we look for it to move up. And now, it doesn't look like a big move, but that's a 5-minute move, and that's a minor flag, And that's just what happens. If it was a big flag and everything lined up, the big flag has a measured move also. This is kind of the measured move of a flag. It's just a channel, and it went the distance of another channel here. And there's also a trend line right there that is off the screen that goes all the way back. I remember cutting this out, but there's a big trend line, so it makes a lot of sense to take profits into that. As everything lines up, it says here, as everything lines up, you take the trade either when the price hits the 20 EMA or the 9-3 stochastics touches the 20 line. Very important to buy into weakness and start taking profits on the first candle out of the flag. And I found an error there too. So meaning we buy into the 20. You have to be buying at the bottom part of the channel, and then you're selling on the first one or two candles outside of the flag. So you're capturing all that move. It's a much bigger move than buying it on the breakout and not getting anything. The object here is we know it's going to go because of everything lined up perfectly. So that's a very excellent thing to pay attention to there. And then let me show you the other one. Now this is the first one I did. And I did this one because this is an important factor that we've been going through with the market pulling back. So I made one of how to get out of a trade if you're going long in a downward trending market. All right, so that's a more difficult trade right there. And again, that's probably one of the things I try not to promote is buying, if you do get a bounce area, you got to be able to take that bounce off very quickly because you're considering the bigger channel overall. So any type of longs are going to stay within the bigger channel. And it could be a short setup also. But in this case, we're looking at just a basic understanding that buy signal was confirmed, or you're in a trade. Maybe you're off of a trend line quad rotation here. Trend line quad rotation. That's an HPS setup. So if we have a recognizable channel and we got a quad rotation, that's a buy. So you got a nice move up. So you place your stop under the low of the pattern. So once you go low, you just take the low candle within 3 candles of it. On an initial move up in price, watch the 9-3 stochastics and the 60-10. All right, same thing. Determine if the overall daily trend is up or down. Is there a downtrend? Are we are we trading under the 200 EMA? No or yes. If we are trading under the 200, yes. Then if the 9-3 stochastics moves back to 80 fast and the 60-10 is heading down or holding under 30 and the price is under the 20 EMA on the 1 minute chart, take profits as the 9-3 stochastics reach 80. Move the trailing stop to break even on the remaining shares. Let the trade play out. So basically, you're getting that quad rotation here, and you're taking your profits right as you get overbought, and you move your stop up to break even in case it breaks out, and you're good to go. But most likely it'll come back and get you. So here we go again, up. It kind of pulls back. Another overbought level here. That's actually a real good sign of weakness too, because it got up there to the 80 line, but it didn't give us any upside. And again, down here, quad rotation again, a little bounce, and you can see the trend is down, and you have to respect that. And why go against it? Why gamble? Why gamble? I'll add this to the, this is a little thing of different things on the swing trader, scalper, and position trader. I'll let you guys, I'll put it all together and put it out on the email to everyone. All right, so again, it comes down to you now, not over trading. I'm just going to send out the quad rotation. I think, if there were some new people coming in here, I've just thought about this before, and I said, why, I still think this is overwhelming to new traders. Flags, stochastics, understanding the concept of what stochastics are. There's got to be a better on-ramp. And I give out a lot of education for free. So, it's up to you guys to kind of get that education and stuff. But, it still becomes overwhelming to a newer trader. And I would really almost consider tearing this out to new traders, just learning that divergence setup, learning that quad rotation divergence, and just losing that as the first real good trade that you learn, and then start passing on martial art moves. I will then teach you technique number 2, crane grabs carp. You know what I'm saying? So if there was a new trader coming on, want to just teach them how to trade, not overtrade, and giving them too many opportunities in the market's going to make them overtrade. So again, I'm going to be very serious about this going forward. I think it's the most important thing. The most important thing is just making sure you're in front of the market on a good trade, and if it's not there, there's no reason not to trade. And if you are going to trade, then do it with like a prop account, with your own account. Take the gambles on that. It's okay to gamble, but this is one way of, we're talking about what do we do? What's our final goal here? Our probabilities of success. I always like to measure. How many successful trades we could compound that by how many contracts and stuff. But I wanted that. So the more and more you trade, the less that number is going to come down. If we could get 85, 90% of successful trades, taking a profit out of it, that's great. That's unbelievable. But any more trades you put into that and fail, it just wears you down. Your average will drop right off. And nothing's going to be perfect. So, and you have to take the good, you have to take the defeat sometimes, and understand. And you have to understand patience. Big trades will come, and if you have patience to get or in front of them, or get the alert and get in front of them, then that's where you make your money. So that's our goal going forward. Not overtrading, being in front of the market, hitting it when it's good, and then and building that rhythm, building that. All right, well that's it. That's my pep talk for tonight, and I think I was going to go into more detail stuff, but I have another video coming up, and there's been a lot going on. So looking forward to the futures opening up here in about an hour, maybe. About 20 minutes. I'm going to do some trading tonight, and I'll catch you guys in the market. DayTradingRadio.com, by the way, and those looking, I forget it.